All right. I was wondering who was going to show up for a impromptu meeting. I got a trader that's been with us since like 2016, and he's had a few rough patches. He's a funded trader with the Apiary Fund. He's had a few rough patches, and I've known him for a little while. And he reached out to me and said, "Hey, can you take a look at my trades and tell me what I'm doing wrong?" And so I said, yeah, if you don't mind me doing it publicly, because I don't really I don't mind helping you guys out, but I don't want to do it one-on-one. If I'm going to help somebody out, I want it to be beneficial for the entire group. So if that's a deterrent for you guys to not to be like, hey, look, I suck, right? But sometimes we're our strongest when we're our weakest, right? When we're most vulnerable, right? Okay. So let's take a look at these. This is the first time I'm actually looking at these trades. So let's take a look at these trades here and see, what do you guys see? So I do know that this is an M1 chart. So has anybody ever had this before? How would you have traded this?
I would not have put those buys in at the top of that pile.
Okay. Right here.
Yep. No buys yet. Wait till it gets down to the bottom. Or sell.
Okay. But nobody anticipates this on a 1 minute chart, right? I mean, you don't plan for that to happen, particularly when you're in a range where this is a action point, that's an action point, that's an action point, that's an action point. You don't think that it's all of a sudden going to just break down. Now, the only way that I would say, and I don't know this, I have no idea, the only way that you tend to get that kind of a rundown is usually if there's an outside influence to the market, like a news event, talking head, something like that, right?
I had a similar action with USD yen. Crazy views.
Just barely.
Outside range, yeah.
Right. But the one thing that I will say, and again, I can't measure this, but I'm saying if this is on the 1 minute chart, this is the size of the candlesticks, I'd probably say that this is at least a 20 pip run, at least a 20 pip from top to bottom, right? And if that's a 20 pip run, the number one thing that I look at, and the thing that I talk about all the time in our classes and live trading, is the direction and the verticality of this move, right? The verticality is straight down. Well, if it goes straight down, it's a high likelihood that it's going to get followed by a straight up. So there's a V and a V. So the moment that you take these trades right here, you are taking a max loss, right? And the only reason why you should take a max loss right there is to avoid a 5%. Like you're at like 4.5. And that's the margin. Yes, but only the people in the hot seat run into that one, right? So I'm talking to the group. The only reason why you would take a max loss right there is that you're really close to risking out. If you're not risking out, then taking this is not advisable. Never, ever, ever take a max loss on the verticality move, particularly if we haven't seen that before, right? Now you have seen this. So this is, I guess you could say this move right here is counter to this move. And so, but this move right here is counter to this move, right? And so that's the way I always look at it through that lens for me, right? And so I'm assuming that, obviously he's into buys here. This is a great place to buy. These are all good trades. And I'm thinking, without looking at history and or without looking at, hey, are we in a trending market? Is this the direction? I can't really advise on if this was advisable to take this trade or not. If the market was this, then I would say, yeah, if you think it's going to come back up and touch the top and break higher. So I can't really say that this was a good trade or a bad trade because I need more data over here to understand that, right? But what I will say is that once you're in, now what do you do? Right? What do you do once you're in this trade and the bottom falls off? Now, Duke, you just said you experienced the similar thing in the Euro JPY. So what did you do?
Well, I kept adding into the 50%. And then after that, I knew, oh, this is going to start running down to where your mouse is. And I was like, wow, this is a very, very strong drop. I actually started adding sells to try to save some of it. And I was still adding buy at the bottom.
You started to hedge into this.
Yeah. And then at the bottom pivot there, I was adding more sells and I added more buys, took off my sells, thinking it would turn. And, once it popped, broke out, I was really adding the buys, trying to get that pop up. And it did. It got a small pop up, but I didn't have enough for break even. And then it fell some more. And I was like, oh, crap, I really got to now start hedging. And at that point, my Alveo closed down on margin. So I was like, took a negative 8% loss right when.
Because of margin?
Yeah. But I basically saw there was a 3 price cycle drop. It hit the support. So I was now scalping buys, and I got several, 3 times some buys, and then it went against me. And then I was adding some more buys, scalping. And then once it started at the very bottom there, I was like, oh, okay, it's finally stabilized. And that's when I really smacked it on with 0 take profit. It went back to the 50%, and I was recovering almost to break even until at the top there, it got crazy again and it dropped. And that's where I lost out. But I basically recovered, got back to break even from a negative 8% in that crazy
verticality move.
Yeah, but it just did some more unexpected, because I was thinking it would retouch the top there, and it dropped. And the next move was it retouched the top.
Sure.
So it just was doing some very, very crazy things that I was, unexpected. And I fortunately disabled in the move where it dropped again, because I was too heavy at that time. But at least I got back to break even, and on the one move.
Sure. So this is the only thing I'm going to say about looking at this guy's trades. Man, I don't really know what this means. I know it means minimum drawdown, but I don't know what that means in relation. Is this where he lost 0.97? And if that's the case, if he only lost less than 1%, then this is not a good move, right? This is not a good move, because you have tons of bullets that you could have put on to mitigate that. Now, you don't say, hey, I'm going to buy here and I know it's going to run up to here. No, this is the way I would have played it, and this is the way I would have traded it, is that once this happened, I have to assume that he's not in heavy here, because this is the first trades, right? He's out of everything. He gets into his trades here. I have to assume that he's not just smacking heavy, because that would be a different story. So he's in light, it drops. He does this where he says, okay, I'm going to start to fade it. I've been here a million times. I think we all have been, right? Where it just drops in against us. And then we go and we're like, okay, I'm going to fade it. And then you start to fade it. You fade it right here. And then it doesn't work out, right? Hey, you get continuation. The first continuation that I get on a move like this against me, I just sit. So I have this trade and this trade, and I just sit there, right? And I wait for this candle to come into play. For the first 3-bar reversal, and 1, 2, 3 reversal to come into play. Once that 3-bar reversal comes into play, then I stack more trades on, right? If it fails, which it does here, if it failed to go even 50% of this candle right here, that means it would fail to move higher, and you're going to get that downtrend. Particularly this wick right here would tell me that that's a downtrend, and I could either make 1 or 2 decisions. I probably wouldn't have enough trades on here to make this break even. Pretty confident that I wouldn't. So I would probably take my profit, stack my profit in right there on these trades that I put in. And then I would get into a little bit of sells right here for a run or a retest of right there. and I would get out of my sells right there. So I'd make a little bit of money here, close out, get into some sells for retest of the low. Depending on the action of this candle, I may hold, but it may hold depending on the action. If it stalls here, I'd get out, right? But I'd be also looking for buys. If I wasn't quick enough, which some of you guys are not quick enough to take that move, then you're stuck with a layer of buys here. You don't get out here. It runs down again on you. You wait for that next 3-bar reversal, which is coming in right here.
Right there, you can see a lot of volatility.
You can, right. And there's an option right here in all of this mess right here where you could just be doing the 2 pip thing, take profit, where it's like smack, smack, smack on the sell, smack, smack, smack on the high. I would probably do that 2 to 3 iterations only, right? Because you don't know, because eventually it's going to break
3 times,
right? And so you could do it. And so if I go in, the first time I'm super confident, so I can go in really, really heavy. The second time I go in lighter, and the third time I just dip my toe in it, right? But the other thing that you could also see is market structure right here comes down. You could see that this is a little bit of a flag that's happening, right? Or a little bit of a wedge right here. Can't really draw it, but you can see it's a wedge. So you should have continuation right there. But let's just say let's say he didn't see it, which he didn't. So he got in here, and he got in here, which is a great place, right? I'm not complaining about this one or this one, and I can't judge this one because I don't have enough data. So this is a question mark. So this would be good. This would be good. Getting out here was the mistake, right? Because market structure broke down, you had some continuation, you saw the 3-bar reversal, you get in, and then all of a sudden you see this kind of forming into a wedge right here. You know it's going to break down lower, so you just wait for the break, and then you get back in right here on the 3-bar reversal, and you do the same thing. It's just you need to have enough bullets to have to do the same thing. It's just wash, rinse, repeat, wash, rinse, repeat. Had he had put even just a layer here or even a heavier layer here to make this his break even, he wouldn't have sent me his trades. I guarantee it. He wouldn't have sent me his trades. You should see my chart. I love it, Joseph. Thank you. So that's my quick assessment of this one. And he sent me one more. I'm just going to do one more. Okay. Knee jerk. Haven't looked at this real quick.
Well, he didn't peel off. He's taking profit on buys, which is good, but he could have peeled off his sells there, and it turned into a major loss runner.
Yep. Then major loss, major runner, particularly on these guys right here. He put his break-even line here, where his break-even line should have been on these trades. It should have been right here, right? That should have been the break-even line. However, this one is the one that scratches my head the most. So I have no idea what happened there. Why he let it run all the way down here, came all the way back up, and didn't get out, right? I'm not sure about that one, because he got out all of these, but not these. So that one's a head scratcher. I don't really have anything to say about that one. Because why would you get out of these but not these? And when you're maybe he's thinking I can make more money on these or something, and then it just turns on here. That's the only thing I can. Yeah,
well,
that's
the
what I'm thinking.
One, I've been guilty of that as far as taking profits on the second one. Because if you look, it looks like 2 pips or 2 take profits. Scalping, and that's when you get anxious. But if you held right, that would have been that break-even point on that second drop.
There's a lot to unpack here, and there's a lot of decisions that without being able to ask the question, I don't know if I can really come in and hone in. The only thing that I would look for is making sure that he's placing trades at the proper place. Like right here, I don't think I would be placing buys right there, right? On a breakup halfway in, and this is an outside range, I would question the buying thought process here. And here, I don't know if I'd question that if you think this channel is going to continue and you're just going to build into that. But the moment that this channel broke is right here, right? And that structure changes, and this becomes the apex, whatever, or the channel. If they got an up channel, now you got the down channel. And when you see that market structure and you start to getting lower highs, then you definitely do not want to hold on to these, because chances are it's not going to come back and get you profit for this stack, or this stack if you can see that you're starting to get lower highs. So you need to build into a position on the down enough to where this is now your break even and you get out of everything. And so the number one thing that I would say is you need to practice win while losing, because that's going to help you in this example, right? Practice win while losing, and then just maybe making sure that you're not chasing the market, because this looks like a chasing the market trade. But all your other trades, I would say this is I don't know why you'd buy in this one, even though it worked out. It's still, you don't want to buy at the top of something. Well, I guess never mind. That looks to be the bottom. So there's a lot of questions in here that I'd like to unpack, but without being able to ask them to the person, I'm not really sure. All right.
Can I share something then?
Sure. Is this show and tell night? Let's do it. Let's make it show and tell night.
Well, I think that the biggest thing is knowing where plan A and plan B is.
Right. And that all has to do with market structure, right? So This is
right there. Yeah, exactly. Plan B. And that's what I've learned, but it took me a while to figure that out, because in the past I didn't think on plan B, right?
Mm-hmm.
And so I just kept adding to losing trades without winning while losing too early or whatever, because I'm not thinking through plan B.
Right.
But now I can recognize where market changes, and I'm like, okay, if I failed on my WL, then I'm going to get out and I'm going to flip, because that is a running market.
Yeah, for sure. I mean, I think, like I've said this a couple times, that I think you and a lot of people are now starting to get what I mean by identifying market structure, because market structure can change on you quickly. But if you know where the key points are in the market, then you can be able to recognize how to trade, how to change and adapt and overcome, right? And that's all about what we want to do is trading. So let's take a look at the euro here, right? So obviously it's an obvious channel, and that's what we've been in all morning long. It's this obvious channel. So that one is really not very difficult to trade. But if you look at the one without looking at the 5, you wouldn't see that, right? You wouldn't see it's an obvious channel. So a lot of people will do that, is they will just look at one chart without looking at the other. And I think that's just a mistake, right? Because you're thinking here, oh, we're in consolidation. It's not going up. It's not going down. It's not doing anything. We'll look at the 5. Well, it's definitely in a down pattern. I knew somebody was going to ask me about that. Does anybody know what these arrows are?
Buy sell arrows.
Pete and Nick.
Fractals.
Fractals. Ed. What's a fractal, guys?
The pivots.
Anybody know? No clue. Nick, you knew it, but you didn't know what they were?
I can read the red text up in your indicator. Aren't they just Bill Williams's pivots?
Similar to pivot. I mean, yes, but I don't use them in my trading. You guys know that I trade a naked chart. However, I'm putting together a price action course, and this is the tool I used. Pivots and I use pivots and fractals in my early stages to help me identify pivot points, pivot areas. And so I've been putting together a bunch of videos for people that have for beginning traders that need that. And so that's why I have it on there. So, and then once you can start to see them, I use them. I just don't use the indicator anymore, right? Because now I can identify where those pivot points are, where the apex points are. But I also use them in my nighttime trading as well. And like if I'm going to do a night trading, or I've tested some night trades where I don't really do it very often. I have a few trades on some other accounts where I've used the fractal strategy, I guess, for lack of a better word. And it tends to work out. I don't throw it's for longer term trading, not for the 1 or the 5. And so I wanted to kind of share with you guys a little bit about how to use this, but also at the same token, before I do that, the bigger thing is, let's see if we can't get into some secured trades, because that would be awesome. That would really be awesome if we can't find an area where we can secure our trades and let them run, right? So if we're looking at this 5-minute downtrend, and we got this right here, and we got this right here, and this is kind of the middle right there of if it crosses this, probably right there, then it should run down and go all the way to the bottom, right?
So Dave, I got a question.
Yeah.
So as I'm looking at the 5, it almost seems like it bottomed out and now it's making higher highs and going up. But I get the feeling that you're not feeling that.
If you're saying right here.
Yeah. Like it's going up.
It
and
could.
Then maybe the dollar is going down, which causes the euro to go up.
It could, but you don't really know that. I mean, do you know that? Did you do the homework to know that? Or are you making a guess right now? And I don't mean to put you on the spot, because there is a way to know that. So I'm asking, did you do the homework to know that this was the bottom spot, or are you just feeling that? Does that make sense?
Right. So not to be smart alecky, but I did a little bit of homework. So I looking at the dollar and then looking at the dollar Swiss, which kind of the dollar Swiss goes up when the dollar goes up. So with the Swiss the Swiss starting to go down and the dollar going down, I was biased that the euro was going to go up, and then seeing that on the 5-minute, I possibly thought that that's the turning point. That's as much homework as I did.
Yeah, well, I didn't do the homework, so I was like, "Did you do?" So I'm like, "It could." Do you know that? That's what I meant. Like, do you know that, or are you just making a gut feeling, right? So that was the next thing. Is like, look, it's come all the way down, but we don't know where on these two charts. You widen out the one, it looks like it's in a consolidation, right? It's just not really going up or down. The 5 is definitely going down. So we need to know where market structure can change, right? And so then that's when I do widen out, when I have no more data over here, right? And so I tend to go to the 1 hour, and this tells us a little bit about where market structure could go. And let's see, actually Albio is better for this.
Just a quick question.
Yeah.
Can we use fib extension?
You certainly can. They're right here. So your fib extensions are, wrong thing, right in the drawing tools. Here's your retracements, and here's your expansions right here. in the drawing tools. So you can use
Okay.
all these tools right there.
Great.
So
Thank you so much for answering that.
yeah, you're welcome. No, a good question. Thanks for the question. So
Yeah.
what you got here is right here is where it's bottomed, right? On the 5 minute, or well, price is bottomed here. And this is kind of in relation to the 5 minute, but this really isn't a turning point in the market, right? If I was going to think it was going to bounce, I'd be like, man, it could bounce here. It definitely could bounce here. And it really is going to see some lows here and is really going to bounce here. But I don't think, tonight, tomorrow, anytime soon, it's going to run, 100 pips. We just haven't seen a market like that. Can it? Sure. But we haven't seen a market like that. So we do the best we can with what we got. And I'd say, because it came down to here, where's the next spot? Right there. And so before it bounces, I would say it has, another a little bit more to go before it touches this support level. So that being said, everything is negated. All my information, everything that I've just done is negated when market structure changes, right? And it could change. And I have to be kind of what we were talking about this morning is I have to be cognizant of when that happens, right? So you have, we talked about plan A. Plan A might be for it to come to the top of this channel and then continue and then come down to here. That honestly, that's kind of what my plan A would be. But my plan B is once it crosses this right here, this is my plan B. And I'm saying, okay, it's no longer going to play this channel anymore because it's come up, crossed this, and now it's starting its path up. Does that make sense? And that's why we look at market structure. And more importantly, at night, if you're going to set some overnight trades, you have to do this work. You have to do this research. And then you have to make a best educated guess as to the direction, that it's going to go. And if I was to get into some long-term trades, like an overnight trade, I would probably set my stop loss. Somewhere. If I felt like it was going to come up and touch that, that's 10. I'd probably go like right here, somewhere in there. And again, you don't want to put it past a point where, and we'll zoom in. I'll talk about that in a second. You want to make sure that it's below the previous support right there. So I would probably put my take profit right in here on the 1 hour. And I'd probably put my stop loss right under here. Right. And so I would be buying for overnight trades. Right. And the only reason why I'd probably be putting a pending buy on right here. Right. And the only reason why I would be buying is because I think it's going to come down and bounce at this point. Right. And it has about 20 pips to go before it bounces. And the other thing that I would look at is their news. Right. And I don't know the answer to that. Anybody know if there's going to be some Euro news overnight? And what's the Euro news? What if there is, can you forecast that, right? Can you see if that's going to be good for the Euro, not good for the Euro? So there's a lot of information that you have to take in when you're going to set up overnight trades. So a lot of times I don't do that because you guys know I like to my preferred method of trading is the wobble, but tonight's the anti-wobble because they didn't have the class on the calendar. So I thought I'd still give you guys a treat for the wobble crew. So we're not talking anything wobble. We're talking about overnight trading and trading setup, right? So that's what you get tonight. What's that?
There is news at 1 a.m. my time.
What is it? Is it
It's the German GDP.
What, yellow, red?
Yeah.
Well, it's yellow on the chart, but the German market can really move sometimes.
I've got it as red on daily FX.
All right. So we want to, whenever you're setting up trades like that, you just want to be cognizant, right? So let's go ahead and see if we can't get into some secured trades. Now, I don't anticipate, if we're going to get into some secured trades for a run, I would not anticipate that this is a market condition or a market structure where we're going to see, 20, 30, 50 pip run, because we've gotten volatility coming in, right? So you got to spike up 15, 18. And so when you get into a secured trade, you almost need to let it be at least 10 pips of profit, or a good chunk. So if I was to get into a secured trade on right here, let's say it breaks above here, and I would think it's going to run up to the top, and I'm down here. The only way that I'd get into a secure trade is if I had good profit, right? So let's say that you buy in right here and it comes up and it crosses this. This is where I would secure my trades right there. And I would secure those, but the chances of it coming up here, touching that, is pretty high. So when I look to like really kill it overnight and, wake up in the morning and you're like 5-6% overnight, because you've just caught something, it's usually when you catch a ride the wave situation, combated with news that comes into the market. And so those perfect conditions creates the best tidal wave, right? And then you just get to ride them. And I've definitely been on the positive sides of those. And you never know when the perfect storm is going to hit. But for me, I like at least opening up and giving it a chance. So you know what? So guess what? If I make 1% in the morning, I secured. It's good. I don't care. I got my 1% and I'm good. Or I have an opportunity to make 5 or 6%, right? And so I like to give myself the opportunity with overnight trading. Does anybody else do that? Just curious if anybody else jumps in. No.
I stop my overnight trades before the London market.
Right. So, okay. So you get out. Why do you get out as opposed to securing them and just letting them run?
Because often the London market changes direction.
Right. But if it's secured, does anybody not know what I mean when I say secured trades?
Oh, I know what you mean.
I know you know, but I'm asking if anybody, because I just thought that. Anybody? Okay. Bueller?
Yeah, we get the gist.
Okay. Jeez. Pete. I'm just kidding.
Blow the whistle.
Get a technical foul. All right. So yeah, that's what I'm saying. Like, I used to do that too. I used to just get out all my trades, but I've learned through great returns that might as well give them a chance, right? Might as well. You got nothing to lose if you have a secured trade. It's gonna close out in profit, so might as well give them a chance. And so a lot of times I will do that and try to set up for a secured trade. So, I just don't know if I want to just. What do you guys think? Should we trade this? No, we're not going to trade this.
I was thinking it wants to slow and drop because it's wedging. But
Let's see how this pair's doing.
If you pin it, and it pops up.
This pair looks like it's kind of. If I was to look at something, it looks like it might be doing this. I know it ran down and then shot back up, but that still means it has room to come down to there. And of course, on the 1 minute, I could see it rounding, right? You could also see there's an M that's forming right here. This might be a good chance to demonstrate that. Got some good. Yeah, we'll go ahead. And our spread's kind of high. Why is our spread so high? It's not usually that high.
Well, recent news.
Oh, is it we're on the hill of some news?
At the start of that that craziness there on the left.
I'm going to go ahead and sell into this and see if it pops up, and I'll get a couple more sells on just because we see there's a possibility of an M forming. And the reversal breakout, and it could also be a cup and a handle. So you got a lot of different things that are saying sell, right? And so whenever I see 2 to 3 identifiers that say, hey, you should be in a sell, then you take it. You should be in a sell. And so we'll kind of stack in. So what I would look for in a secured trade here in this situation is if it does, in fact, break to the bottom, break this, I would secure my trades right there, right? If it breaks this point, and I'd secure them above that point. Just continue to stack in. See if we don't get an exhaustion bar. If that doesn't turn into an exhaustion bar or a, no, I'm not ready yet, and then come crashing down. Well, hey, anybody have any questions? Because like I said, this needs to be a interactive group here tonight.
I had a question about how you picked your bias as long on the Euro USD when you were first analyzing it. You showed us the downward channel, and you talked about how you felt like.
So I picked my bias for longs for an overnight trade setup, but my bias for short term would definitely be down to that point, which is only like 10 pips, right? So I only really had 10 pips to go down. 10 pips is nothing for an overnight trade.
Okay.
Does that make sense?
Yeah.
And so I would probably put a buy stop on down to where the bounce point is and then do that for an overnight trade setup. But I tend to not do overnight trade setups very much. I used to do them a lot. I tried to do it over the last summer. I did really good. But I was still testing a lot of different things. Then the market structure changed. The market structure changed, and then I started not doing so good. So I'm like, I'm trying to figure out some method to the madness. But then I just really enjoy getting into secured trades. And I'm like, hey, I'm already up 1%. What do I got to lose?
I would prefer that. Yeah.
So I kind of abandoned getting a solid game plan for overnight trades. You know who's really good at overnight trades and who taught me and I got really good at it was Steve. I don't know if you guys remember Steve, but he would teach overnight trade classes, and that's what got me kind of into it. Trying to figure out how to trade overnight. Because I mean, who doesn't want to? Yeah, Scuba Steve. Who doesn't want to make money in their sleep, right?
Right.
Is Steve still in TOTS?
No.
Because I was like, I don't recognize him.
Yeah, he's an old instructor back in the day. He's not old. He was a kid.
He was super young. Yeah.
Super young. Yeah. So, yeah, he was a really smart kid. He's a really smart kid.
I mean, Rex does swing trading, and a lot of that is overnight as well.
Yeah. Yep. You know, I haven't really. So Rex and Kevin are two traders that I haven't had. I've seen them lecture, but I've never been in any of their trade rooms. I should watch them. And just.
I have a comment, David.
Yeah.
The first two charts you showed was a lot like a Kevin trade that the buyer was looking for the bounce.
Okay.
And he put on all those buys. And of course, it ran too far. And that's a lot what Kevin would do, but Kevin would use a very small size, like a 0.02, even a 0.01 sometimes. So he'd have layers, layers, and layers. So when it bounces, it comes back up through all the layers, which is what I think the person was doing on those first two slides.
Got it. Yeah, I can't speak to that because I don't trade that style. But if he's sending me, if you're sending me trades to review, then I'm going to review them through the lens that I look at the market. Does that make sense? So I can't speak to how Kevin would do it because I don't look at the market the same way.
The other point on those two charts, those V's, every V, and in fact, if you look over on your
right here, these guys.
Yeah, well, any V, top or bottom,
Sure.
there's always a ledge in the V. That ledge is what I use for my jumping point.
Right here.
Yeah, that's one of them. On your 1 minute chart, it's real obvious the high one there.
Right here. And then
Yeah,
this.
you drop down to the bottom of that the bottom of that first green candle.
Sure.
There's a ledge right there between that green candle and the blue.
Mm-hmm.
And if it passes that ledge, I go short.
That's kind of one of your rules that you do. That's awesome. One of your trading
Yeah, if I
rules.
say it, it is.
Well, thanks for sharing. Appreciate that.
Yeah.
So now we have to look and see this M didn't happen. So now is it going to be a W, right? But if we can get
Looks like consolidation, right?
it's definitely consolidation. So I'm caught between trying to get into an overnight setup and just trading like normal. Because trading like normal, I'd probably go heavier here. A lot heavier here. For a take profit here. But I'm trying to get into a overnight or a secured trade setup. And when I do that, I don't go heavy. Right.
This is a third test, so it could drop.
Exactly. Ooh, I love it, Duke. I love it because this is what we've been talking about a lot in class, or I didn't say class, but trade room. And I love that you guys are starting to recognize that. Everybody's starting to recognize that. Jimmy, thank you. Good to have you tonight. I don't know if you're actually really there or you're just giving us some FaceTime, but either way, we'll take it. I miss trading with you. It's been a while. Oh, I don't think he's there. I'm going to call him out on it. Anybody have any questions? It's a Jimmy bot. I love it. Comments, questions?
My impression or feel for what you normally do is like you kind of sit down and trade at night, and then as something looks like it's going to run, that's when you start setting up for the secured overnight trade. And is that true?
Yeah. So yeah, let's take a look at that. Right. So this is the perfect time tonight. In fact, that I like to watch jazz games, right? And I think I've mentioned that before. So I like to watch basketball games. Basketball games last, anywhere from 2.5, 3 hours. And I will get into something like this and I'll hold on to it for 2.5, 3 hours, and I'll have it on one monitor and I'll have the game on another monitor. So I'm not trading or not staring at the trading screen the entire time. And I'll just kind of glance back, commercials, whatever, put a few trades on here, take some off here. And when the market moves this slow, I tend to increase my position size. And then if I get a breakout, like if I'm in the right direction and then this does pop, you generally pops, down to here, which is 10 pips, but it's also 2 to 3 times the size of these price cycles, right? Or you get what I call, I think some of you guys have heard this before, you get what actually Sean calls, and I affectionately dub it, is called the Tokyo drift, where it just drifts in one direction slowly. And I love that too, because I can catch that, take a couple hours, it drifts, and as soon as I'm up 10 pips or whatever, I'll secure those trades, and then I'll start stacking into more or finding other areas to stack into, or start taking. After I secure a layer, I shove it to the side and I don't even think about it anymore. And I look for another opportunity to secure another layer. or secure another layer. And sometimes I do get 3-4 layers secured, and those are my happy days. I do happy dances because those are days that I like to get, big double-digit returns or whatever. And
How
so
far apart are your layers though? Like 10 pips or 20 or?
no. So let's just say, for example, it's a good question. It does break this, comes down, right? Comes down in here, and I say I secure it right here because usually you get that retracement that comes back up. I'd put another layer on right here for a ride down, right? And then does it again, bounces up, put another layer, secure this layer here, these layers here, secure those, and then add another layer on, and it comes down, secure them all right there, right? If you get like that.
Right. But do you also add the counter trend, high probability trades too?
It doesn't. And I don't, because the market tends to only move in one direction, like I said, in a Tokyo drift. And so it only tends to move in one direction. So
you're just waiting for that pullback, and whatever the market gives you, you add. So
right.
it could be 5,
and,
it could be 10.
And the key here is to be patient, right? You got to be patient in all these trades. The key is to be really, really patient and to watch a movie or whatever while you're working on this setup, right? Because it does take 3 to 4 hours to set up. And I was lucky the other night, I think yesterday. I got lucky yesterday on a setup where I was getting into some trades like right there. You don't really see that. You don't really see that kind of pop up, right? But I was lucky yesterday where I was in the right side of a pop up. Well, I knew it was, I didn't know, but I played trades for the buy, and I felt like it was going to come to this, to a level like that, like it's doing right now, and I placed buys right here and went to the gym, came back from the gym, and I got in really heavy because it was an obvious trade. And I was like up by like 9% when I came back in like an hour. So I'm like, oh, that worked out. That was awesome. But I had a secured layer, exactly kind of like this play, but where I got into buys right here because it was at the low. And I stacked into buys right here. My risk was that if it crossed this, I would get out, and I just close out everything, and I'd probably be down. I was heavy enough to be where I would have been down like -3%, but that was an acceptable risk to me. But as soon as this crossed like here, I secured them really quickly because this was heavy. It was really heavy right there. And so I secure them really quickly if they're heavy. And so I just knew that pop was coming, secured it. Then I was like, okay, I'm gonna go to the gym now. Came back, and it never came back and got me out. I was like, huzzah, that's awesome. Oh, Jimmy is there. You just can't talk. You can't talk? What's going on?
No, I put you guys on hold for a sec.
Oh, put us on hold. That's it, Nick. Why'd you let him in the room?
Did I have to be admitted? Why? So weird.
You have to go through the bouncer, Nick. Yeah, I gave him power.
I'm actually at your back fence, Dave. So.
Oh, whoa, scary.
No, I've been over here giving Sean a hard time.
Oh, you're at the office?
Yeah, still here.
Oh, okay, cool.
Yep, I was about to go, and then I seen the nifty title of this class, and I was like, heck yeah.
I hate wobbling.
I want to be an anti-wobbler.
Sure.
So edgy.
Anti-wobble is the right away. Is that it?
Yeah, exactly. So this is the thing that also sucks at night, right? When it just goes up against you and then nothing, just goes flat, right? I don't like that at all.
We had a corresponding drop on the Euro USD. Just like you said,
How far did it go?
not as far as you said yet.
So now that it's crossed this with the body, then and I'm still thinking that these trades might still be in play only because, well, I'm looking at this right now. I mean, you got this trend, but that doesn't do anything. You got this little trend. As soon as it crosses this, if it crosses this right here, then that's where the market structure will try to change on me. So this is my opportunity right here to do the win while losing trade, right? Or not necessarily, I'm not in heavy at all. I'm still light, but I'm giving myself right this second a chance or a thought that if it does break above this, I don't want to let it run away before I can get out on a bounce, right? So I'll get out on, I can now get out right here. And if it goes up even more, great. And just continue to add more on. The moron trade. As Jimmy Pete calls me a moron. Oh.
The moron trade.
Although
Never heard that.
Is good.
Joseph, no, you're not. Joseph says, I got that trade down. Just put more on.
That's awesome.
So I do really think, I mean, it's definitely going to come up here and test that, right? And we'll see. And this is the part that gets you in trouble a little bit at night when you're on the wrong side of a drift. And if I'm on the wrong side of this drift and it breaks up and continues to go that way, then I'm going to switch. I'm going to get out and switch everything. However, I've gotten myself into a position to where if it does come up here, bounce, I can get out on just a little bit of a bounce. I'm also not necessarily, I'm not nervous at all. Even if it does cross here. The thing that does give me pause right now is just, I've been in the nighttime trading where it shoots up and then does nothing. And I just like, I don't want to be in that. I don't want to be in a shot up and then do nothing trade. It's more just out of, don't want to sit for another hour trying to work out of trades. In the daytime, I love this. Like morning time, I love being in this situation. This is where I make a lot of money, is when the market goes against me, allows me to put layers on. And this is what I've asked. I think Jeremy, is Jeremy on here? I thought I saw him come in.
Yeah, I'm here.
Hi, Jeremy. This is what I've asked Jeremy to do, which I probably will do as an example, that if it does come down and cross my break-even line, I may just put a secured trade on right there.
I've been doing that. It's working out pretty well, actually.
Duke, I didn't know I could move my break-even line. Oh yeah, my break-even line. My break-even line. My break-even line's now there. See that?
You can just refresh and it'll
fix it. No, I want it to be there.
That's the cheating way, which it doesn't.
We'll make that happen.
We'll just add some more trays and look, auto fix.
I love it.
So what happens if, let's say, you don't have enough bullets? You just cut it, take the loss, right, and flip?
Did you guys see my Mortal Kombat Sean Lucas?
Uh-uh.
He poked
Right.
his head in. He poked his head in and said, "Woo-hoo."
Oh. Nope, we missed it. It was too fast. You should have done the woo-hoo.
Yeah.
So if you're out of bullets, then you're out of bullets, and you got to make desperate calls, right? In the evening time, you shouldn't really be out of bullets. I mean, you can go heavier. That doesn't mean that you should still max out on your bullets. I never.
Well, like someone in regular account, I mean, they only have like one lot, right? So 10 or 20 trades if you're doing 0.05. So let's say they were layering win while losing like this, and then
I still would say that you still go back to this fundamentals and position size, right? But if you are win while losing and you get caught in a Tokyo drift, then you need to find the areas where you can start taking off trades by avoiding the max loss, right? And so there's the other technique.
right.
You start pilling off trades, you start taking winners, you start taking your winners, pilling off your losses, right? So I don't have any winners on right now. Well, anything that I'd say, could take off. And that's kind of the other thing too, is I always like to have winners on. So it gives me that opportunity to do that. So if I need to take off and start pilling off a 10 pip loss, I'd have to find 10 pips in my winners to take that loss off. And that's what I'd start doing. And so I'd have maybe take 2 bullets to take 1, right? 2 to take 1. Now that ratio automatically diminishes if I drops below here. Now I could probably get it to a 1-to-1 ratio instead of a 2-to-1 ratio. Right. And so that's kind of how I would start managing my trades and managing my losses is looking for those situations. If I'm starting to get over where I don't normal conditions, I get nervous when I'm about 50 to 60% of my bullets. When I'm about 50 to 60% of my bullets, I start to look for opportunities to lighten up, right? And that could be just pilling off my winners, recycling my trades, getting in again, all that kind of fun stuff, right?
So like right there, market doesn't look like it's gonna go down any further, right?
That's not what I'm seeing, but I mean, it could. So I'm hoping that we get this round, it breaks this and comes down and tests that. That's kind of what I'm seeing right now. But these wicks are not being nice, but that's what I'm looking at right now. And so if it fails to cross that 50, then we got another attempt at that breakdown. We'll see. And the other thing that you can do, not again, kind of mixing up my night trading with my day trading, but I wouldn't do this at night. But if I'm trying to fix trades, then I'm immediately just going to hunting for profit. I'm hunting, sniping for profit. And that's something that you can do too, is where if the market gives you at least 2 pips, you can start sniping. Joseph, thanks for hanging on. Appreciate it. Have a good night. Darren says growth challenge. How many trades are we supposed to be able to put on? Yeah, 50 is your max on the growth challenge. Yeah. So this one, 19 seconds left on the candle. It's crossed and it's a good sign. So you need to pop it down.
Time to move your break-even lineup.
Love it. Do.
Break.
Oh, that's what it needed. Do it again. Say it again. This is like watching paint dry, so it's not that fun. And I'm probably going to give up on looking for some overnight trades with you guys. So that means I'm probably going to start looking just to get out of the market here and just go back to work. But this has been the anti-wobble.
Definitely feels like it.
It's the first class, and Nick is captain.
People are just going to think that means you're bad at wobbling.
Let's see. This is my break-even line. Duke, is it going to work? Just kidding. I know it works. It's what's the name? Where are we coining it? I like the
Break it even.
no, it has to be it's got, yeah, it just took a dookie, right? When you get your break, when you take it off your break even. When you hit your break even, you take a dookie.
That's the it's the courtesy. The courtesy flush.
Because Duke made the indicator, so we gotta name it after him. Can't call it break even. It's the Duke, the Dookie. Glenn likes Duke Nukem. I like that too.
Nukem.
Not against that. The Dukinator, like that.
Well, Duke Nukem was more like loading up on trades.
Yeah, Duke
Right.
Nukem. Yeah, for sure. Yeah, taking a Dookie is definitely breaking even.
The Dookie line.
The Dookie line. I like it.
That's hilarious.
Your Dookie line.
Oh man, that's some marketing for sure.
Yeah, see?
You got to get on the other side of the Dookie line, or you're
Yeah.
deep doo doo.
Doo doo.
We're in doo doo right now. We got to get on the other side of the Dookie line.
No Dookie for me.
We're almost out of the toilet.
Oh man,
Back in the toilet.
I stepped in it again.
What was that about positive thinking and phrasing everything?
We're totally
Like the
destroying
opposite of
everything.
Duke's philosophy here.
Or destroying everything that we talked about last night.
Yeah, he's like, you took my name and you
Do as I say, not what I do.
not what I do.
Oh, that's crappy. And Josh, Josh, I gotta give you props, man. You're like you're sick, but you're still
That's
participating.
some grit.
When I was sick, I just laid in bed.
Yeah, we didn't see David for it. He was still making double-digit profits, but we didn't see him.
You were more profitable when you were sick, so that's what he's trying to pull.
Yes.
You pull the doogie, or you're gonna wait.
No, I'm not gonna pull a dookie. No, just because I've been waiting for this.
Should we secure? Should we do Jeremy?
Yeah, let's do it, Jeremy. Jeremy, you got it. You got something named after you. I think I will. I'll secure and I'll probably put it right at the dookie. Oh, didn't
It
let me
does
do
not
it.
account for spread. Don't forget.
I'm gonna have to do it.
Well, loss if you.
Oh, okay, it did do it.
You have to double check because it doesn't always update all trades.
It has after I did the repair thing. Thank you,
Nice.
Hunter. Appreciate it. After I did the Windows repair on it, it has been working like a champ. All right. I do not think, or I do not feel, I should say, that these trades are viable trades. I'm going to probably have to give those back to the market. And I'd rather take what I got right now. It's this tiny profit. If this crosses that 50% right there, I'm probably just going to get out. And then I'll probably see if there's enough profit from here to here, because I still think it's going to touch that. But I wanted to get out of my bad trades, but with using my good trades. So I'm probably just going to do a two pippers. And try to just kind of load up. Because I'm no longer looking for a security trade overnight. Those are really hard. And I know Referee Pete, you've been asking me all the time to show how I do that. And it's really, it just takes hours and lots of watching paint dry. And that's why I don't show it, because I'd rather be doing something else and feel like I'm walking around doing stuff. Don't have to be on a class to show that to you guys. Now I took a lot of trades right here only because at the same position, only because I wanted to load up, right? So for me, I'd still go heavy here because the market's not moving very fast. I mean, that's a 4-pip move. It's a 3-pip move. So if you're going to make money, you got to go heavier. And so probably instead of, because I was at a 0.15, I'll probably move this to 0.25 and not click as much. But you only want to do this if you can recover from probably a 2.5% loss. Because if it does all of a sudden just boom on me, then I'm going to just get out everything and then get into another market condition where, like for me, recovering from 2% down is not that difficult. So I'm just word of caution. If you trade like this in the evening, you can get burned there, but I take my chances. What do you think, Jimmy? How you doing? You trading?
Yeah, I just jumped in.
They're like the man in the chair for Spider-Man.
The man in the chair.
You know, from like the first one with it's like him and his best friend, and he's like, I can be your man in the chair. And
Oh yeah,
like I'll do all the stuff on the computer while you are out in the field.
Yeah, is that what Jimmy is? He's the man in the chair.
Yeah, he's got his headphones.
He makes everything happen while I'm out there
You're in the
fighting
field.
fighting crime.
Whoa.
He's
Bond.
definitely the voice in my head. What would
Does he
you
have a cat? Does he have a cat on his lap? Is he petting the cat?
I was trying to find
Oh,
something.
Inspector Gadget.
Yeah.
Yeah, there you go.
I was trying to find something.
I was thinking
Fuzzy.
Inspector Gadget. I'm thinking Austin Powers.
Whoa. I was thinking Bond.
$1 million.
So question, I mean, why get out of trade if you thought it was still going to keep going down like that? Just to minimize the risk in case it pops up?
Why did I have 2-pip take profit?
No, like, because you close your trades, right? To get out of bad trades.
Right.
And then you still added on. So it's like, well, why not just?
Yeah, it was a safety move, just in case it didn't. Right. In case it didn't and it bounced up. So that's a great question. Great question, dude. So I had bad trades on right here, right? And this could have been a potential reversal point, and so I didn't go in super heavy. But if it was a reversal point, it's only going to go up to about here and then come back down. Or come back down, and I could get out of those ones with break even if I felt like the market was
right. So basically, you're taking it off so you have the bullets to fix.
Right.
Wrong. Right.
Exactly. And I do that all the time, whether I have bullets or not. It's just I'd rather get out of bad trades, right? And we learned that today with Jerry, that he had bad trades on, and those bad trades influenced his decision in the market negatively because he could have enjoyed a lot more profit if he wasn't worried about those bad trades.
Right. So like, let's say right now, market's turning up again. If you were still in the bad trades, you wouldn't be able to flip the buys, and you're
exactly.
lost kind of thing, right?
Exactly. And for it to turn into buys, it's got to cross this with the body, right? But this is not a position where you should be selling or buying because it's a coin toss. I don't know. I don't know what the market's going to do for the next 5 pips, right? Because this is what we're looking for. Where's the next 2 to 5 pips? Is it shorting or selling? And then we analyze our risk reward ratio or risk reward, right? So if I get into sells here for a possible right here, that's really, I have to make sure there's enough money here to do that. But then the next thing is if I get into sells here and it does pop up, is there a likelihood that I'm going to fix them? How hard is it going to fix them? To fix them, right?
Right.
But this is not a good place to buy because, obviously it could bounce. But if it does come up and you just don't know. So you just don't know if it's going to turn into like this, if it comes up and just go, right? Where the next 2 pips or profit is on buys. I really don't know where the next profit point is on buys. And so for me, I tend to wait for confirmation. Look at that. Do you guys know how to trade fractals? Anybody?
No.
Jimmy, don't you? Don't we ever teach you that?
One more time.
The fractal rock.
Ah,
Have you been to the fractal rock?
So it's saying fractal sell right now.
I know the fractal rocks.
Dun, dun, dun.
So what was the question?
Dun, dun. Cash your cares away. Worry for another day. Let the music play. Down at Fractal Rock.
Someone's been up
It's
today.
bedtime for David.
Come on. Sing it with me.
Okay, so one of my kids, when he was 2 or 3, when he would get overly tired, Party Leo would come out and he'd just be goofy. So now we got Party Dave's coming out.
Party Dave's coming out when you get through that slap happy moment. No, I just been so fractals are hard on a one. Every indicator is hard on a 1 minute chart. But let's take the fractal trade. You guys want to take a fractal trade? Let's fractal this bad boy. So what you do is anytime there's a fractal, this is a buy indicator, this is a sell indicator, right? And it's totally adverse to wobbling. Yeah. So it's the anti-wobble. There we go. Because right here, you don't buy, right? You don't buy there. Neither do you on a fractal. But what a fractal says is that the range of the candle, what the rule of a fractal is that the range of the candle will appear as a profit. So you always get, in order for it to be a fractal, you always get 2. I'm in the wrong drawing tool. You always get 2 higher bars followed by 2 lower bars, which creates the apex or a V, and that's the rule. And so every time you get a V, you know that it's going to be going down the other side, right? So if you take this fractal, and let's go back into a test mode here real quick. Boom, boom, boom. All right, let's just pick one of these. And I never do it. I never trade a fractal at the top of a range. So this is my range right here and here. This is my high range. This is my low range. I never take it in here. So we'll use that one in a second. So what you do is you measure, let's play this one. Let's take this guy right here. You measure the top of the candle and you measure the bottom of the candle, or the bottom of the candle, of that green candle right there. So you get your price, and then you got a handy dandy calculator. Where'd it go? Where did it go?
Just a question. Can 3-bar reversal be a fractal, as a 3-bar reversal consists of 3 candles?
Absolutely. And
So
that's
we
what
can consider 3-bar reversal as a fractal, right? Or it should consist of 5 candles, 2 on one side and the 2 on
and
other side.
2 on the other. Yep.
So that's a traditional Bill Williams fractals consisting of 5 candles, right?
Correct.
Yeah.
So do you trade it?
No, I was very curious about that indicator, so I have learned that indicator, what it is. So everything works in a fractal. So every move that goes, it has some sort of fractals into it. So I've been to that recordings of Bill Williams.
Oh, got it.
Yeah.
All right. For some reason, it wasn't pulling up. So I got this little fractal calculator that I built just to help me.
Fancy.
And to help you guys.
You must be analytical.
Hey, shut your mouth. Just kidding. I don't call you bad names. Just kidding. No.
Oh, it's an identity thing, huh?
No. Okay. So you take the top of this candle, which is 134870. So that's the high. So it's 1.34870. And you take the low of the candle and 1.34795. 1.34795. And that gives it the range.
We're doing body to body.
No, you're doing top of the wick to the bottom of the wick, but there's not a bottom wick on this one. So you do the range, the entire candle. So
that one
range,
candle. Okay.
The one candle range, right?
Uh-huh.
The one candle with the fractal on it, right? So you do that range. And then we're looking, this is a buy signal because it's green. So you look and say, okay, you place a buy stop right here. And we're going to turn this one into a buy stop really quick. We'll make this a order line, yellow, green, whatever. I don't care. So you move that to 13491. 13491. And this would be your order for this if you're playing this fractal right there, right? This is your buy stop right there. And then your take profit, assuming would be 134945. And we will go ahead and change the color to a awesome green.
So is this like a momentum trade?
No, it's basically the rule of a fractal is that the body of this candle. So the rule of trading
Which fractal are you using? That one, right?
Yeah, this one. So basically it's saying that this candle right here, and I messed that up.
It looks great.
Thanks.
Just click the mouse and you can move it. There you go.
Basically, this candle right there, the range of this candle will appear. The theory is that this range of this candle will appear above it, the exact range, right? That candle will appear above it.
Oh yeah.
On a fractal or a down fractal or whatever, right? And so that's why you play the range of that candle. It's so much, doing it on 5 minute, doing on an is not good. This is for people that like to set their trades and forget them, right? For long-term day traders, where you look at swing trades, where on the hour chart you see, okay, this hour candle was this big, so I'm going to take this much profit out of the market, and you trade light, right? You never trade heavy here. So it's just like a day trade, swing trade type situation. And so now we got that, but I'm looking at it on a 5 to see if the model works. And so now our take profit is 1 34945 945. So the theory is that the market's coming along right here. It triggers, right? We're in a trade. It triggered the trade right here, came back, triggered the trade. And eventually there's your exit right there. Right.
There's the stop loss.
You don't have, who trades with the stop loss?
Oh yeah, sorry. I forgot.
Now for me, you just run the same. You run the same ratios, but I usually put it below the range, right? So that's got to break out of that range in order to do that. And I used to do this all the time earlier on when I was trying to figure out before the wobble. I would trade this all the time, and because I didn't really understand price action, and this was a great tool to help me to understand price action and price cycles. And I used this to kind of identify where the market was going to turn down or up, all that kind of stuff, right? So just didn't know I was going to teach you guys that, but there's fractals. Fractals 101. Jimmy, did you know that? That we were going
No,
with you?
that was a long time ago. I kind of remember I had mentioned that how you took basically the copy of that fractal, right, of that candlestick.
And I kind of forgot
Like
about him
compared it.
until I had to I'm putting together the presentation, and I forgot about him, and I'm like, oh, if I was starting brand new, what would I do? And so that's kind of where these came back in, and actually on a different account, I have a couple long day trades. I'm like, I'm gonna do it and see how it works out. Longer ones where if it works out, I'll be making like 100 pips or something like that, because that's outside of our conversation, and probably I would say the rest of the trading world. People usually don't move. The needle doesn't move for them unless they get like 50 to 100 pips. You know what I mean? Like people are hunting for 50 to 100 pips. And so we're kind of abnormal when we're only looking for 2 to 3 pips. And so fractals are huge outside of probably our environment. So any question?
Majority of traders are swing and
Yeah. So I don't know. I like it. I used to use them all the time, and I'm like, but once I found the wobble, I got a lot more consistent. I made a lot more money, all that kind of stuff. So this is now turning back into a love for the wobble. But if you're going to set,
really,
there's a bait and switch.
You don't like the wobble? Come to the anti-wobble.
Yes, I'm gonna. By the end of the night, you will love the wobble.
Right.
it's
I'm more consistent. I made more money.
Yeah. You got the anti-wobble to attract all the folks who don't like it.
Well, let's maybe let's do this, guys, tonight. Let's set up a fractal trade for tonight, and let's see how it works out. Let's do it on the 30-minute chart. I'm gonna do it. You guys can. You choose.
So, which indicator did you add?
Fractals.
Is it just the,
So it's a fractal indicator. Frickin' frack right there.
I'm confused how you chose that candle.
How I traced it? We'll go over it one more time, and you guys can follow along. If you want to take it. If not, yeah, the big disclaimer, you can't be mad at me in the morning if you experience loss. I'm gonna take it. I'm gonna do it. So let's do it on the euro USD JPY. Why not? Or do you guys want to do it on the euro? What do you guys want? You tell me. Do you guys want to do it on? Nobody cares.
well, the yen is going
Euro
to
JPY.
USD JPY.
All right, yeah.
I like doing it where the spread.
Australian cash.
Yeah, I don't like doing it when the spread's too crazy. Like the pound, 1 to 1 or 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 yen or whatever dollar
Yeah.
spreads like too high. Okay, so let's take a fractal. Let's look at the 30-minute chart here. Well, guys, what do you think trend is?
A tough one.
Well, overall it's up, but then it looks like it's turning down.
Yeah, up and over.
I mean, our trend has definitely been up, but you don't know. So let's
We're getting lower lows and lower highs. No?
right here.
But that could be the short term. So
Just widen this out.
the daily is up though.
Yeah, look at that. Kind of came all the way up, down. So what do you think? Should we do a bifractal? I think we'll do a bifractal.
Yeah. But right now it's in a up because it hasn't reached the 50%.
So I don't want to do this one because it's a little high and it's a big fragging candle. So let's do this one to be safe for tonight. Let's do this one. And so what we're going to do is we will just quickly just put a bar right here. So you come in here and get the horizontal bar and you put it one bar on the top of the wick and one bar on the bottom of the candle. And if it's a wick, it's always the wicks. So you wick out right here on this candle. We'll zoom in to make sure we got that. And then that gives you your candlestick range, right? Not the market range, just this candle range right there. And then we'll
So why that candle in particular?
What's that?
So why that particular candle?
No reason.
Okay.
I mean, I do have a reason, but it's not a big one. It's because it's safe. So what I mean by safe is that, what I mean by safe is that it's not a very big candle. Like this one's a huge candle, right? And so to play a fractal off of big wicks and small body makes me nervous that it's not gonna hit that, right? Not gonna hit that range. And
So it's high probability target.
Right. This is a little bit higher probability of a target for us, exactly. And so I'll play this one versus this one. I mean, you could play that one, but that's on the top side of that range. So I'd rather play when you're inside of a mid range where it's more likely going to hit. Does that make sense?
Yeah, totally.
But really no particular reason. I mean, I could have picked this one, could have picked that one. Don't think I would have picked that one, but could have picked that. Any of these I could have picked, but I just decided to pick this one right there. All right. So now we got our candle range. We go to our handy dandy calculator. Yep. And push your glasses up because we're nerding out right now. 134,741 is our high, and 134,638 is our low. So that,
Why not just draw or trace the candle and then move the box in Alveo?
Couldn't you have just clicked on the candle and it says high and low?
yeah, but I need to know that to put in my calculator. Because if you de-click it, then your high and lows go away. Does that make sense? But all right, so we got our highs and our lows. Now we can take this off. And we will put a buy stop at 134,781. So I just kind of click on here and put a buy stop right here. And then I double click into the buy stop. And go back to my calculator. Put my entry in here. Paste that. Put my take profit. Paste that. And my stop loss is set at a default.
Is the buy stop
not
just
100.
halfway across the range?
That's what
Or
I'm
what is that calculation? Buy stop minus entry.
Whoa, that scared me. Somebody's at the door. What was that? Sorry,
Yeah.
Nick.
It's Jimmy.
It's Jimmy.
I don't knock.
I was asking where those, like, if we don't have this calculator, how are we coming up with our buy stop? Is that just halfway across the range?
Oh, gotcha. So you're doing it with me. If you don't have the calculator, the map, it's a fractal map. So it is G4 plus G6, and that's given, and that gives you your take profit points. That makes sense. So you just add the two together to price.
Oh, okay.
Yep. And so that's where our take profit is. So we'll go ahead and submit that, but we have an invalid stop loss. Sometimes Alvia doesn't play nice with this because I'd like to just put it on the chart and then move it myself. I gotta go down actually. We'll just make a stop loss here of 134.396. Am I wrong? What's wrong here?
Your copy paste had the decimal in the wrong spot.
Your take profit is 1.3 instead of 134. And so is your.
I said it before Nick, by the way.
Oh,
Whatever.
Thank you guys. Thank you guys.
You copied and pasted from the spreadsheet and it said 1.34.
Got it. Because I put it in the wrong on the spreadsheet wrong.
Well, no, because that's why like the rest with yen, you have to multiply by 100, right?
It's still wrong.
Your prices also.
Your stop losses.
Because I put it in wrong. It's 134. Because I'm so used to doing the USD, like 1 point, right? Not 134.
Yeah.
So it's 134 point. And so there we go. There's my
The yen is wrong, not you, David.
I like it. Yeah. Way to pull back from yesterday. I like it. Okay. So my buy stop, my order price is this now. And my take profit is this, should be the same. And my stop loss is good. All right. There we go. All right. So that's how you do it. But I probably would put my stop, probably bring my stop loss up to about right there and making it have to cross the market right there in order to hit it. And I'd probably bring my take profit down just a little bit because I don't like it on the other side of a break of a body. And so I just manually adjust those. And I would move it up if there was room on the body still. So this says it's going to trigger the trade if it comes into here. And it gets you out right there. And that's how you trade a fractal.
That's actually a pretty good setup because it would pass the 50% and then continue.
Yeah. And if you, so I'm going to trade in this account, I'm probably going to put one lot on. I'll do one lot. And if well, now it's all jacked up. My calculator is broken because of the yen. Because it says I'd make $5,000.
Oh, nice.
But we all know that it's like a 10. Yeah. I'd make $100 on that. Or yeah.
Not a bad set it and forget it, right?
Yeah. So that's how you do fractals. And I wouldn't risk, if you guys, I would only risk like it's one trade. So if you have only 2 lots, then I would put a quarter on of that. Right? For that trade. Any questions?
Nope.
So when you do your fractals, is it normally an upside down risk to reward ratio?
No, I just did it.
It's just the way that it
it's just the way that it came. Like I want myself. The chances of it coming down here and touching this point is greater than coming and touching this. Does that make sense? Because it has to break this in order to hit that.
Yeah, and what I mean is like
I know all the experts will tell you 2 to 1, right? So if I'm going for 10 pips, then I should put a 5 pip stop loss. But a 5 pip stop loss and this thing is too narrow. Does that make sense?
Mm-hmm. And when you've done these before, does it sometimes work out where it's a different ratio than that, or is it always like the stop loss is a little further away than the profit?
There's a rule to the stop loss, and I could get into that, but technically,
nah, it's fine. Don't get into it.
I'm going to give you the feeling, not the law, not the rule. My feeling is that if it comes down here and I lose, well, I've got to get in here and I lose 20 pips. On this, I'm risking maybe like a 1% drawdown, something like that. And that's really easy for me to fix. And so that's how I put my stop losses. For me, is what's easy for me to fix. Right. And that's only on this situation. Right. If I know James possibly said his stop loss is always an ejector seat. Well, if I'm walking away from my trades, I don't do an ejector seat stop loss because that's just way too far. That makes sense. So now I put a stop loss on something that I feel like if it does hit the stop loss, I can recover from it fairly easy. That's kind of how I manage my stop losses.
And that would also be with quantities or as well, right?
Yeah.
The amount that
exactly.
you're risking. Like if I want to lose the stop loss for this trade, then obviously it wouldn't be, in a lot size, or, I could do smaller lot size and then have a looser stop loss, right?
Exactly. So if I have a stop loss of 20, then I'm losing $150 at one lot. And the $150, like I said, it's like around a little bit more than 1%. Not that big of a deal for me to hit a loss of 1%. And I wake up in the morning and I can fix that before we start trading in the morning. Do you know what I mean? So, but for you, if 1% is difficult to hit, then I would not risk that. And use this risk calculator to figure that out. What should I hit? Like if I'm trading with a 0.25 and I risk 20 and I risk 20 pips, it's $37. In a growth account, that's almost 1%. So maybe that's too much of a risk for you. So you dial it back down to 10 and there's $18. So that's how I kind of look at stop losses, is what I can recover from if it hits. That makes sense, Pete?
Absolutely.
But there is rules out there, your 2 to 1 risk reward ratios, all that kind of stuff. And all that is really, really great for new traders to adhere to those rules. But when you start trading, you kind of get a feel for how you like to do it, your own style. So, all right, guys, you guys have definitely got a lot more time.
We're in bonus.
So again, anti-wobble lesson tonight, but any questions?
The anti-wobble is the fractal trade.
It is the fractal trade. It really is. It probably is for sure. Any questions before we bounce? Before I let you guys go, your head hit the pillow, because we got to get up early in the morning for, I don't know who's going to be in the hot seat, but we'll find somebody.
I wasn't saying it was an ejector seat.
No, that's what Sean calls it.
Yeah. Okay.
That's when you said Sean explains it like that. That's why I called it an ejector
But
seat.
he also goes further than that, and he'll, in the one video, he definitely shows all his trades. He says the odds of me ever hitting that are like, I mean, they're just so rare, right?
Yeah, they are rare. And the time that I've ever seen him trade, like watched him trade live behind the camera for years, I've seen it twice.
Yeah. So, I mean, so proportionately, I think the 2-to-1 thing, it just in my time trading and working with other traders too, I think it's like you said at the beginning, it makes sense to think like that.
Right.
But I think if you're leaning on your stop as the thing that makes your trade a good trade or a bad trade, then you're not understanding the trade that you're taking.
Correct.
And I think that's the most important thing about a stop. If you actually understand your trade, then you understand that you're going to be exiting before you come even close to that stop. But if you don't understand that, and you're not in a place emotionally and mentally where you're capable of, on a consistent basis, pulling the trigger when you see that the trade is no longer the trade that it started out to be, then I think, then there you go. That's where the stock, you lean into it heavy. But to my mind, the trader that does that, they're probably going to move their stop anyways. You know what I'm saying?
Yeah, exactly.
That's the problem, though.
Yeah. So that's why I don't like to hear that 2-to-1, because that's not really what gives you the 2-to-1. It's how you're actually executing your trades over time that breaks down your entries and your exits, and whether or not your win rate is achieving that 2-to-1 ratio.
Sure.
Well, the 2-to-1 for beginners is good because like they lose more than they win.
But I think sorry, I didn't mean to interrupt. Go ahead.
I was thinking the only problem is moving the stops.
Right. That's what I was going to say. But I think that as new traders, the first thing I tell them is do a 2-to-1 risk reward ratio. Then the next thing I got to say, don't move your stops.
I do that though. Like for me, I constantly move my stop to try to protect the profits, but that kills the two take profit.
I personally just use that rate. Didn't use your stop ratio like what I do. Figure out what your stops, if it hits your stops, can you recover from it? And if you can, that's a good stop, right?
Yeah. And I think to err also on the side of when you're doing the secure trade type maneuvers, like you've said, David, and that's something that I learned early on, is that you've got to be willing to take profit off the table. If you can't build that habit into your trading, then you're going to be constantly be at odds with your trading.
And that's the number one thing I love about the wobble.
Yeah.
Going back to the love for the wobble is that you take 2 pips.
You have to take a profit. Yeah.
You have to take a profit. I mean,
yeah.
I
love that. This is a great discussion. I love discussing stops, and really more the discussion of exiting a position, because I think that's really where it comes down to how well do you understand what you're doing, and and it really comes back to, do you actually have a reason for being in that position? So, just my thoughts.
No, great, good comment.
Can I offer another idea on the set and forget fractal idea?
Yeah.
So if you have a 1-to-2 instead of a 2-to-1, all of a sudden the likelihood of you winning even just a random trade is 60%. But given that this puts more odds in your favor, untested, I haven't tested that, but I'm assuming that's why we would do it, then that gives you just a safe, easy way of having a higher win rate on this trade model. Does that make sense?
No, say again. I'm trying to grasp back. So,
instead of having a 2-to-1, right?
Yeah. Mm-hmm.
Having a 1-to-2 increases the odds of you winning an already favorable situation.
I get it.
So, you get a higher win rate with a system like this combined with a 1-to-2.
Sure.
Which I imagine would pay for the greater losses.
Well, can I tap in on that, Dave?
Sure.
Yeah. Okay. So like if I was, I like what you're saying, Glenn, but it kind of leans into what
just in a set and forget situation, not in
right.
Oh, okay.
Yeah, that's what he's talking about.
Yeah, I like everything that everything that you said, James, and that sort of
okay,
that way of engaging with and owning your trades in
Yeah, I
completely
like
different
that. I like
than
that
you get
idea
total.
too. I can live with that. Yeah.
But for a walk away model that's based on a higher probability, like you take a 60% higher probability that you have just from the randomness
Yep.
with a 1 to 2, and then you increase it further, you just increase your win rate and
And
presumably
you're reducing your
way-
drawdowns. Yeah.
yeah, pay for
I
the
get it.
occasional drawdown. That's all I'm saying. Only for set and forget. Yeah.
Sure.
Yeah. Well, our trade definitely triggered, so we'll see how this little guy grows up. We're nurturing now. He's still an infant. Come on,
Well, I
trade,
think it's
bro.
going to play out just because it's a great target. And
So I'm curious, why was that your target?
Because that was the range of the candle.
yeah, there the can.
Of the fractal candle that we were trading.
Okay, which
So
candle did you draw on? Because
well,
I
it's
saw you
not-
drawing lines.
Yeah, it's not technically the range because I adjusted it to be under the. I adjusted it to be under. So if you take this candle and you put it right here,
Oh, okay. I got it. Yeah, I
you see it,
understand.
and then I moved it down slightly so it would be under here. Does that
Yeah.
make sense?
Yeah, I understand your logic there. Yeah. So
Yeah. So that's what that's ultimately the easiest way to explain what a fractal is. I mean, I don't even know what the
you're just doing a
definition of
measured
fractal is.
move, right? So,
Exactly.
yeah.
So it's like it's saying that, hey, if this candle is here, it's gonna reappear. This distance will reappear somewhere else, right?
Yep.
And I don't really trust this one because you got one on the top, one on the bottom, and it's huge, right?
Yeah.
So
Yeah.
so you still have to be like, nope, not that one,
Yeah.
right? Can't
They're
not every
working
single.
overtime on that one candle.
Yeah, exactly. I mean, it'd be nice. Let's play this one, and you take profits would be clear up there somewhere, right?
Right.
Hey, that's a good breakout right away situation.
Yeah, exactly. So I mean, you still have to have a little bit of common sense when you're trading. There's no 100% guarantee of anything, right?
Nope.
So I think we figured that out day one. All right, guys, I'm gonna let you guys go. Let your head hit the pillow, and we'll see you guys bright and ugly tomorrow morning for some fantastic hot seat trading.
All right.
Thank you. Appreciate it.
Thanks, guys. Have a good one.
Hey, everybody.
See you, Jimmy.